Happy Saturday, everybody. I hope you guys are having a great weekend. Larry Summers just came out and said that he thinks there's a 15% chance the Fed could be hiking rates next, not dropping. Now, this on the back of an absolutely massive change in mortgage rates over the last week, and we just hit a critical threshold 7%. I'm going to show you a chart that shows you just how bad the rate 7% can be. We're going to look at it. Fascinating. Guys, there are some trends that are breaking the seasonal narrative, and it could be very, very bad for the housing market. Now, I'm gonna show you the data. I'm gonna let you guys decide. We are also gonna show you how how builders can absolutely wreck your financial future. This is not meant to be dramatic, but the truth is you need to learn this lesson before you buy so that you don't make the mistake that some of the people made in 2022, because this is brutal, brutal, brutal. So with that being said, my name's Ethan Flynn. I am a CPA, a data junkie, a real estate investor, a licensed real estate agent. Now, I do help people buy and sell in the Nashville area. But without further ado, let's get into the data. First things first, Larry Summers sees meaningful chance that the next, what happened? By the way, guys, I finally caved and bought my Bloomberg subscription back. It was, I went a month. I saved it for a month. It's like $15. Summers says meaningful chance next Fed move will be a hike. And guys, I've been warning about this, not because I'm smart, but because I listen to smarter people than me, and because I listen to people that aren't in the real estate industry, and this is what they've been saying. And so he said there's maybe a 15% chance that the next move will be upwards in rates, not downwards. Now, this is on the backs of the CPI coming out hotter than expected, the producer price index coming out hotter than expected, expectations that the PCE, the Federal Reserve's favorite index, being hotter than expected. So there's a lot of everybody saying, actually, we may have hit an inflection point and CPI is now trending higher. We're just gonna have to watch, right? If February comes in hotter than expected, then there will be real chatter about a Fed rate hike, and 8% rates are back on the table, guys. Mortgage rates could go to 8%. You know, I did that video a few weeks ago. Rates are all over the place. All I'm saying is be careful. Nobody really knows, but 8% rates are a very, very realistic chance this year. So just don't dismiss it because, it can't go to 8. It absolutely can go to 8, guys. Don't make that mistake. Let's look at unemployment claims. The past 2 weeks, they've been dropping, and now we're at the lowest we've been in over 6 weeks. And this kind of hits that narrative that it's just not as bad as it looks. Now, we will see if this continues, but it's not like skyrocketing upwards like everybody has projected. Could this be another year of a strong economy? It's an election year. Everybody has their conspiracy theories. It doesn't look to me like right now things are as bad as they feel, according to the data. Okay. Now, you guys tell me. You guys tell me, disagree with me. Tell me in the comments. I'm open. Not going to hurt my feelings. Take a look at this, guys. Active listings in Greater Nashville. This green line is 2024. The red line is 2023. Let's just zoom in on that. Okay. What is happening here? We just broke a year-over-year trend upwards. Now, what makes this especially fascinating is February active listings always trend down. And when I say always, I mean with a rare exception. I'm not saying this is unprecedented, but I mean like it trended down in 2021, 2022, 2023, trended down, okay? Even in 2022, when we had the massive build in active listings, it still trended down in February. We are seeing a break and a trend up. That tells me, guys, that we could have a listing explosion. Now, I know I predict that every year in the spring, so I feel a little bit embarrassed about even trying to forecast that, but this break in trend is certainly something to watch. One of the drivers, at least to this point on the active listings, is contract volume. Okay, when we look at contract volume, you can see our contract volume is 2279. Last year, it was 2591. Okay, so we are, what is that, roughly 320 less in contract right now versus last year. That'll drive active listings up just in contract volume, right? Because less is going under contract. If we have the same amount of new listings, all things being the same, if you have 300 less, you should have 300 more active listings. Now, we started off the year a little bit hotter. So if I netted these, it kind of makes sense that active listings are going up and that they just hit a year-over-year positive. So we'll keep an eye on this, but I got to tell you, this break in trend is certainly something to watch. Now, the two key dates that I'm watching on the contract, let me zoom out here. February 27th, Okay, that was the first peak. And I'm going to show you a really cool chart here in a minute about why it dropped. Because I got to tell you, I was scratching my head. When this dropped last year, I thought, oh, that could be bad. Now, this year is a little bit different. We're going to talk about why. And it has a lot to do with interest rates, guys. A lot to do with interest rates. So we're going to look at how interest rates impact the daily summed contract volume. Just so you know, when I say contract volume, think demand. And just know that contract volume, all I'm doing is adding up the past 31 days of contracts, things that are under contract as of today for the past 31 days. Okay, so if it's been under contract for 90 days, it's not going to be in there. Okay, but if it's under contract and it went under contract in the last 31 days, that's what I'm doing. I snapshot it every morning so that we can create a daily trend. And I've been doing it for, you can see when I started doing it. I started in 2022, but not daily until December of 22. And I've been doing it daily ever since. I do it every single day. So you can see this is really, the dynamics here are fascinating. Big dates, February 27th, May 15th. Okay. Contract volume, big dates, February 27th. Are we going to peak there? I have the sneaking suspicion. I think that we'll probably end up where the trough was last year, but certainly it's a big question mark for me. It's a big question mark for me. On the active listing side, we're breaking that trend. And then could we have a year-over-year increase in 2023 or for 2024? Guys, if it goes up and it goes up parabolically, we had very tight inventory in 2022. It went up parabolically, prices crashed. Okay, they crashed in 10% in a few months, and that was it. From June until January, really 6 months. Okay, it started crashing in June, which leads me to my next point. I want to hit prices really quick. This is median contract price, okay, for all. This does include condos, single families, whatever you want. It includes it all. And what I want you to see is how correlated this contract price is to the blue line, which is the actual median sales price. Okay, now you can see it's fairly, it does move around quite a bit. But if you take the median sales price and compare it to the median contract price, you can see they're highly correlated. And what do we have here? We have a bump from 450 to 470. Now keep in mind, this is everything. This is not the normal pricing I show you, but median contract price is 450. It went straight up to 470. That's about a 5% increase. Could we see a 5% increase? And the answer is it's possible. It really comes down to concessions and how, these prices really shake out. I suspect that there are more concessions this year, but I don't know for sure. So just expect that prices are actually going to be reported up. And people are going to look at that and go, oh, look, prices are up. The problem with this argument is, and it'll take 90 days, a good 90 days to shake out, is that if our active volume or our active listings are increasing and they're increasingly increasing and we get a shoot up, that prices could get soft very quickly. But it will take these comps to come through, right? Everybody thinks prices are higher. And then people go, oh, prices aren't actually higher. And then those comps go through and then they're lower. And then people go, oh, prices are dropping. And then they drop. Okay. So what that means is you're looking at a minimum of 90 days from now before these comps actually roll through and then get undone. It takes that long, guys. So as prices go up, you're going to hear people say, oh, prices are going up. They're going to celebrate it. And we already know the seeds have been planted for a very soft spring. So just keep an eye on it. If you have to buy right now, there's really kind of two strategies here. One is if you know you're in a neighborhood, because guys, this is different for all neighborhoods. But if you're in a neighborhood where things are under contract and you're like, oh, this is going to be a bad comp, try to get in front of that comp, right? You want to be under contract with the price that you've got before that comp, messes up the market. The other strategy is just really take your time and wait for the other side of this. And in that case, your contract volume, you've got to wait for all of those, you've got to wait for all of these comps to come through, see how big the concession is, see how much prices actually do rise, and then anticipate whether or not your active listings are continuing to grow. Guys, if these active listings grow, if these continue to grow, prices will get soft. It will. I can't imagine prices not dropping if our active listings go year-over-year positive, especially if it's significant. And right now, the trend is breaking to where it's very significant. Now let's take a look at one other view. This view right here that I'm showing you, this is a lot to look at. Let me show you. This might be easier to look at So let me start here and then we can go back to that one. This is the same chart, by the way, guys. Same chart, okay? Now this black line that you see, this is the demand that we were looking at. And it's just the contract volume, okay? So this black line is the contract volume. The blue and red dots, those are the daily Mortgage News daily interest rates. Okay? And you can see what happens when they break through 7. And then the demand doesn't really recover until they trough. So this whole idea that, well, if rates start dropping, you've already missed the boat. That is not how consumer behavior works. I've been watching this literally like a hawk for 2 years. And I'm telling you, when rates start trending down, everybody steps back and waits for rates to trough. But you can see as rates hit 7, demand tanks. Guys, this was the spring of last year. Remember, I just showed you last year how we peaked at 2708 and then it tanked? Super weird for the spring, guys. That's just weird for the spring. All right? That was a break in trend for the spring. Well, why did it happen? It happened because rates hit 7% and everybody just backed out of the market. Okay? And they didn't really jump back in until rates troughed. And then we had a new surge in demand. You know, in a 90-day window, demand can push and pull. You can see it push forward to that new high, which was the 3,044. And then what happened? We hit a new 7%. Demand started tanking. It troughed. It stabilized. You can see the 7% is very significant for this market. Okay. Now, 8% could be what the new number is. Okay. Because as we get used to 7%, because it was 6%. If you go back and look at 2022, 6% really wrecked the market. Then we got to 7% and that really wrecked the market. And now we're looking, it was like, oh, well, we've had 7% multiple times. Maybe 8% really wrecks the market. Or maybe it still is 7%. Because demand is, if you can see it right here, it is starting to stall a little bit. Now, I don't know. It could be normal, but looks pretty bad. Okay, same chart, just in black. And I've got some notes here. Okay, this is where SVB collapsed. This is the debt ceiling standoff. And you can see that's when rates started skyrocketing. 2 things I wanted to call out here, though. Fannie Mae in May of last year, and they do this consistently, but I'm just calling them out right now. In May of last year, they forecast, rates are going to drop for the rest of the year. Okay, they were very, very wrong. Lawrence Yun from the National Association of Realtors literally posted on LinkedIn and said, we've seen the peak of mortgage rates. They're down from here. Everybody celebrate. They did that, and mortgage rates went from 7.15, 7.25, all the way up to 8. Okay, these guys have no idea. They have no idea, none, where mortgage rates are going. Okay, so do not listen to them. If you're like, well, the experts are predicting mortgage rates are dropping. If you're struggling with experts predicting that mortgage rates are dropping and you're like, well, they're dropping, just email me and I'll send you a list of experts that are going to tell you that they're going up. Okay, and really what I want you to do is feel uncertain. I want you to feel uncertain because I want you to be more careful. And if you're planning on interest rates dropping, then you need to take a step back and say, that might not happen, and I need to be okay if it doesn't happen. I want to take a look at a neighborhood here. This is just north of Nashville, which, by the way, guys, I'm adding neighborhoods every day to my chart. I love this thing. I absolutely love it. I use it every single day. You can see I added a lot of the downtown condos. I added neighborhoods up here in North Nashville. But we're going to take a look at Thornton Grove here, because if you ever want to know how brutal a home builder can be, let's just take a look at what Ryan Homes did. See all these right here. Now you can see this is price per square foot. You can see all these homes right here above 300 a foot. Okay, it happened towards the peak of 2022, the middle of 2022, the latter part of 2022. These things got shot up, and then what happened? They stopped selling them that expensive. And I did a short on this, guys. But this house right here, 412, sold for 412. This was purchased for $454,000. They put only 5% down and they got an ARM. So Ryan Homes, listen to what Ryan did, because they were the ones that helped with the financing. Which, by the way, guys, this is another reason, if you're buying a new build, get an agent who understands new builds. Just get an agent to represent you, because I can tell you, had this been my person, I would have begged them not to do this. 454, 5% down. It was an ARM. It was an ARM, guys, an adjustable rate mortgage. Okay, we can see 18 months later it sold for 412. Now, I do know that this was a relocation, so hopefully the seller of this home didn't get completely wrecked. But why in the world you are buying an ARM? Do you realize that no other nation, the 30-year fixed rate mortgage is a special product for people in the United States for housing real estate in the United States. You can't get it in commercial. You can't get it in Canada, UK, you name it. You can't get a 30-year fixed rate. Get a 30-year fixed rate if you're going to buy a house. Get a 30-year fixed rate. I don't understand why you wouldn't do it. I just don't understand it. I don't understand it. Anyways, this person got wrecked. Or maybe they didn't. Maybe it was the reload company. Hopefully it was the reload company that got wrecked. The point is, they tried to sell it for more than, and they're like, you can't do it. Why? Because all of the new builds, you want to look at the map of the new builds. Let's just take a look at the new builds. Let's just see all the floor plans here that are 1903 square feet. Okay. And you can see we've got one for 428, one for 449. We don't know what those are. Okay. We've got the ranges from 412 to 450. And here's the problem. How is this person going to compete with new builds going for 412? Look at this one, 412. How can you compete with the new build going for 412? If you're a 2-year-old house and you're trying to compete with all these other new builds, you can't compete. Your price has to be lower than the other new builds. You can see that it's the exact same. I mean, these are the exact same models. So all these 1903s are selling from 412 to 450. If you're going to try to resell your house, it's got to be lower than that. Guys, this is a brutal, brutal situation for people. And you can see this person they lost. They lost. If you want to see another neighborhood, if you want to see me do a neighborhood analysis, put the neighborhood in the comments. I'm happy to do it. I'll add it to my little data tool here, my neighborhood tracker, and we'll look at it. I'll show you what the data says. So put it in the comments, and I look forward to seeing you next Saturday. Thanks a lot.